Hi there, and welcome to this week's...
I wasn't ready. Okay, we're ready?
Oh, we just said
Sorry.
it ready.
Okay.
And then you talked over the ready bit. Hi there, and welcome to this week's Closing Bell. We have a really big edition, special edition, in fact, this week. As you know, if you've been following us in the last few weeks, Murray's been talking about some very important levels on the market, and we're going to get a special update on that today. Reason being, especially if you follow the market like I do every day, it is absolutely dead out there, except for one sector, the gold sector. So clearly there is something not quite right with the world, Murray. Now, where should we begin? You've alluded just before we started here to some important levels and what you're watching. Can you take us through it all?
Yeah, absolutely, mate. What we're going to do today is something that I actually, just in my most recent market update for members of my service, Retirement Trader, where I actually did a bird's eye view going over 50 years. Now, I've been talking about the 15-year channel, but I thought, well, why not show people how does the market really evolve? Because, you know, things are volatile, they're all over the place. Everyone's going, is it going to go up? Is it going to go down? In the end, you want to see the regularity of it. You want to get a bird's eye view so that you're getting a bit of a sense of really what's going on, and which increases your confidence levels going forward when you start to see, wow, there is a real regularity to the market when you look at it in the really big picture, and when you go in very close, all of a sudden it's all over the place and you wouldn't have a clue which way it's going one day to the next. So I want to start with that, looking at the regularity we see over 50 years. Then I want to go into the 15-year channel I've been talking about.
Okay.
And just to give a sense of, you know, whatever comes next, where are the opportunities going to line up? Because we're a bit overstretched on the upside at the moment. You know, NASDAQ's had a massive run. The S&P's had a huge run. I think there's a big case to be made that we can still see further downside.
Well,
coming.
I think fair to say that the vibe now is people becoming cautious and not willing to commit and wanting to see what happens, and basically the market seems more fragile than it did.
Yeah, well, the Trump tariffs, everyone's just going, how is it really going to play out? Because, you know, it could see a big drop-off in sales. We've had all of the front-loading of orders ahead of the tariffs. So a lot of the positive numbers that we've been seeing over the last 3-6 months, they could all be just front-loading, getting everything in place before the tariffs come in. So possibly we're going to see a big drop of demand in a lot of areas. And also as the prices all go up, consumers are already on the edge. I know what we're all like. You know, the last few years we've all been killed. Inflation's bananas, energy prices crazy. I mean, I've just seen, you know, a lot of retailers. Kathmandu just came out and said, you know, no one's buying jackets. Or
Jeans West just went bust.
Jeans West just went bust. All the retail, you know, people are just not spending. So if you then add into that all these tariffs and all of a sudden the car prices are up 20%, is car sales going to drop like a stone? You know, so there's a lot of uncertainty coming.
All right, take us through the that 50-year. So we're starting with the 50-year look,
50-year,
right?
yep. All right, so let's just jump to the chart. And, you know, here is the ASX 200 going back to 1980. So here's prior to that run into 1987 and the crash. So you can see a really big picture. We're always looking for what's the regularity in the market? What is the things that we can really hang our hat on to say, wow, this is really how the market moves. So what I've got is I'm actually using a 3-month chart. So by that, I'm saying that every single bar you see there, every single candlestick is 3 months trading, right? So that is really giving you a big bird's eye view of what the market's doing, where every single bar is 3 months of trading. And then I have my usual moving averages over the top. So that blue line is my usual 20 period simple moving average. So 20 times 3 is 60, so that's 5 years. Mm-hmm. So this is actually a 5-year moving average, which people would rarely look at. So if we're looking at that 5-year moving average on the market going over 50 years, I've then added a Bollinger Band. So a Bollinger Band looks at volatility of markets and looks at, you know, what percentage of trading should take place within one standard deviation or 2 standard deviations.
Okay.
You know, that like 2 standard deviations is what, 95% of outcomes should lie within those Bollinger Bands. So you can see with the Bollinger Bands on that 5-year moving average, there's your 2 standard deviation Bollinger Band below. So what I want people to notice is the market has never really gone below that level. And if it ever does get close, tell you what, you want to buy, don't you? Here's after the crash in 1987, years of selling off. It broke below the 5-year moving average there, getting to the 2 standard deviation Bollinger Band. What a great buying moment that was. There's leading into the 2003, the Iraq War, getting close to the Bollinger Band there, taking off like a rocket. There's the '08 crash. See, cracking beneath the 5-year moving average. That's when the crash happened. Down to that support zone. Couldn't get through it again. Off it goes. Turns back into uptrend there. And since the start of this, sort of 15-year channel that I'm going to talk about, notice that the price has never gone below that 5-year moving average. All the way, it's always provided support. And then you've got the COVID crash. So it went through it, smashed through it to that major support, and then came off there like a rocket, taking off to the upside and hitting above that 5-year moving average. So if we're looking for regularity, if we're looking for something that we can hang our hat on, that we know is for 50 years works like clockwork, and over this last few decades does as well, is this 5-year moving average is massive support. It's been support there, COVID crash, support there. So this channel on the way up, that level is totally massive, right? So whatever happens here, the markets are turning down. We've had a bit of a rally. We're at the top of the channel, which I'll show you in a second. But that is a major target for the market. So if we do crack beneath this 7,600 level, and this is what I've written in this white paper that I've released.
Absolutely.
People can check that out. I mean, hopefully there'll be a link up in the top corner here. Just click through to that. I've written a major white paper on this, outlining the opportunities, because if the market does crack through these levels, it's heading towards this major support. That's where you get your big upside. And we've done that 3 times already in the last 5 years. So I'm just trying to prepare people for what's coming. So if this major high gives way around 7,600, and we touched there just a few weeks ago, we got pretty close. If it heads under there, I'm saying that there's a good chance we see a bit of a sharp sell-off. But that is going into major support, which has been for 50 years. We know unless things really go pear-shaped, like a COVID crash scenario,
it would have to be an extreme scenario.
It's going to be an extreme scenario. Okay, you see an extreme scenario, sure. If we crack below there and head down into that Bollinger Band area, 2 standard deviation below, we know we want to be a massive buyer down there, right? So what it's just getting that mindset. I'm not seeing this as, oh my God, run away, it's terrible. I'll take some profits if we go under 7,600 and be aware. But you've got to be aware that it probably will have quite a sharp move where people start to panic a bit. But that's going to go down into this massive long-term support, which has worked again and again and again. It's paid off. How many times has it paid off to be stepping up in that period when momentum turns up?
Well, it's super interesting because if we do get that drawdown, obviously the news, something will be causing that sharp sell-off and the news will be terrible. And so that's the kind of thing that can give you confidence if you're watching and you're with Murray and that type of thing, to step into the market at that point, because it's never easy. Sounds easy, but when everything's selling off and it's difficult, and then suddenly there's this terrible news. And it just so happened I had coffee with a guy that runs a fund this week, and it's the same thing all the time. People chase a rising market, and when it gets scary, they want to pull their money and go the other way. But realistically, when you get a big sell down, that's the time you have to get interested.
All novice traders, the market's been going up for months, the papers start saying, wow, great rally. That's when everyone gets in. And then inevitably, when the market has a shakeout, they're selling out at a loss. I mean, I'll show you here on the chart how it goes. I mean, this is really the universal structure of the market of what happens. This is how it works. So you have, even here on this rally, coming out of the crash, it rallied there. That's about a year of trading. Right, when everyone would have been saying, gee, the market looks really good, it's rallying, let's buy. Well, what happened to them? They probably all sold out down here. Then you have a couple of years of rallying. Market's looking great up here. They all got shaken out down here. Then again, you've got a couple of years of rallying up here, where the market was just going up and up and up for a few years. I'm telling you, a lot of people got shaken out in that sell-off. And again, the rally up into 22. That's where everyone buys. See how it goes flat lines there for about a year? Everyone's buying up there. They all get shaken out down here. So here we are again. Market up in this period. This is where everyone gets long and thinks it all looks fantastic because it's been going up. And then you get the cycle again. People get taken out and then it's ready to take off again. So what I do is I'm waiting for those momentum signals after we get the correction. I've got the momentum signals to tell me, the pivots that I tell people about, etc., to tell me when that momentum and all the MACDs on the monthly and that sort of thing.
Your system's designed, once we've had this sell-off, to catch the ones that are rising out of the down.
Yeah, that's when you get...
Because some won't, of course.
But this is when you get your great trades. Because if you're waiting after this is sold off, right, let's go to a monthly chart. Show you very quickly using the MACD as well. So if we're just using my MACD, using those 10-period exponential, 20-period simple, and this is when the MACD turns positive, going up above the moving average, which is the black line. So just look at these periods here where you've gone from a negative period where the MACD says, right, it's time to buy. Let's look at what happened after that. Multiple years of rallying. There's that buy signal there. Multiple years of rallying. There's that buy signal there. There's a year or more of rallying. We caught that one. There's a buy signal there after the COVID. We caught that. We made nearly 200% in 2 years after that one because the market just rallied and rallied. And here in the last year, we got another one. There's your buy signal. There's a year of rallying. So you want to act early when you get that buy signal because you're best buying. You don't just... When you are a trader, you want to act aggressively when you get those moments turn up because those moments are actually pretty rare, aren't they? You've got to wait years for those moments to turn up. When they do, you act really aggressively. You've got to be ready to go when you get them, and then that's when you make your good money.
I was just thinking, it's not on the chart there, but the gold sector is kind of typical. Remember, we had the big rally into like 2021, and then it sold down into the second half of 2022. And you've picked up that whole sector picking up in the last 12 months. And now the rally is just, they're going vertical almost now. So that's kind of a subsector example of what you're talking about here.
Yeah, it's all the same thing, waiting for people to get shaken out. The market constantly is either way out of balance and trending very strongly, or it's sort of in balance and it's mean reverting, going back to the midpoint and shaking everyone out. So it looks good, that's not the time to buy. It looks bad, that is the time to buy. So you got to work out how to trade, understanding these distributions, I call them, or range trading. People aren't aware that most people lose money because of the way those ranges develop, because they break out, everyone gets bullish, they break through the lows, everyone jumps out of the stock because they think it looks terrible, and in the end all it's doing is really oscillating around.
Well, why don't you bring up a chart of Regis? That just springs to my mind just talking about gold, because this is one of your gold trades, and Regis for a long time, it was the most exasperating gold stock going around. It had a big downtrend. It had hedged its its forward gold sales at a terrible price, and it was stuck with it. And other gold stocks started to recover. It was still languishing for ages. And then your signal came through, and you got on it. And look what it's done since. It's just just flown up.
That has been a great one. And again, it was all based on the structure that I tell people about. And I did give this. I even told people in Closing Bell about this one. We're looking for the regularity. What are the things that we can see about the market that happens like clockwork? And remember, the market shakes people out. Unwary traders constantly get shaken out of their positions. So what you want to look for, where are the opportunities where people have been shaken out and the market is ready to take off again? So with Regis, here we go, 2009 up into 2013.
What a rally.
Look at that massive rally. What happened? The big shakeout, the reversal, everyone gets shaken out of their positions. Where does it go back to? There's my buy zone there, 75 to 87% retracement. There you go, back into the buy zone. there's my monthly buy pivots coming in there. There's my monthly trend shift turning there. There it takes off again. So then we get the next wave higher. There's your next wave there. And then the failure. Where does it fail to? Midpoint. Where does it rally to? The sell zone. And where does it sell off to once it goes? There's your buy zone. And in the end, this was a big shakeout period. It took a long time because they had the hedging on.
I remember.
And then the hedging got taken off around here. We got in around here. And then I bought it also just before it took off at $2.16. And again, that's the monthly trend turning up, coming out of the buy zone, waiting for these ranges to develop where everyone's getting shaken out and getting to that point where it's ready to blast off, like shaking up the Coke bottle.
Absolutely.
And then bang, off it goes. So it's all a structure that is regular if you can see it. If you go to the bird's eye view and understand how prices are constantly shaking people out and where are the opportunities to get on just as it turns up after a shakeout.
That's an absolute beauty, that one. And look, who's to say I can't do another even rally like that one back 15 years ago, because gold just keeps going up. It's just making more and more money.
And the next is silver. People have got to be looking at this. I've been saying it recently, saying that it's going to break out above $35 US. And if it does break out above 35 US, there isn't any resistance, I think, till about 40. So there's not many silver stocks on the ASX, so I'm not going to give you any actual silver stocks today because I'm actually looking into them all at the moment, ready to do a big plunge onto silver, but it's something for people to start running the ruler over.
Absolutely. Well, I think we can leave it there, but I think, Muzz, with your guidance here, it's really, really good. So we're coming into a volatile period of the market, very interesting in the way it's going to go. So, but you know, these things always throw up opportunities, and just looking at some of the returns with some of the stuff I've done since 2023 when the market was down in the dumps, it always throws up big opportunities. And then you look back and go, man, like,
why didn't I act when I actually had the chance?
Yeah, I mean, you can't get them all, of course, but yeah, there's going to be big opportunities. So if you're interested in what Murray's doing, click on the link below the video. Muzz is opening up his service, which doesn't really happen all that often, only once or twice a year, really. And as you say, like, you with the gold sector, absolutely monstering. It's the only sector that's working at the moment. So well done to you, because you've got some absolute belters, Regis being one example of a couple.
Yep. Yeah, many
so
on board.
Beautiful. So if you're interested in what Muzz is doing and want to put the investment ideas to work in your account, do click on that link. As it is, thanks for today, Muzz. It's really interesting to see how it's playing out. And as I say, the market is not looking bullish at the moment. So I do expect that sell down to come in, and we'll see which holds up and what can come out of it. If you like the episode, give us a thumbs up and leave a comment. And I guess we can leave it there. Have you got any final thoughts?
Buy silver.
Buy silver. All right. Maybe we'll have a silver bell today, Belvedere. All righty. We'll see you next week.
What's a silver bell?
I have no idea.
Tinkle, tinkle.